Hello, I'm Stewart Heath, CEO of Harvard Grace Corporation. And in this week's edition of our vlog here, and our segment today is about tax topics that are affecting businesses. There were final regulations issued by the Internal Revenue Service on a deduction that almost every business has. You may recall in 2018, when the new Trump administration got past the Tax Cuts and Jobs Act. It was a sweeping overhaul of how the tax system worked. And one of the provisions in there that affects almost everyone, every business, is the 100% limitation on entertainment expenses. You know, for years, really since, for about 20 years now, the meals and entertainment have been lumped together and applied a 50% limitation. That was seen to be sort of an even compromise. It's really between large businesses and small businesses, and a compromise between extensive documentation and no requirement for documentation. Well, the Tax Cut Jobs Act refined this further, where entertainment expenses are 100% excluded, and meals remained at 50% exclusion. Well, a lot of questions, as always, if you would think, came up with that. And what a lot of people just sort of concluded is the best way to proceed is really what's come out in the final regs from the IRS. And here, let me just read a little bit. Final regulations reiterate the statutory provisions under Section 274 that no deduction is allowed for entertainment expenditures. If food and beverages are provided during the entertainment activity, they will not be subject to the 100% limitation as long as the food and beverages are purchased separately or otherwise separately identifiable. However, the food cost will still be subject to the 50% deduction. So no change on food, absolute exclusion on the deductibility of entertainment expenses. It goes on to define entertainment, which I'm sure is important for some people who are trying to determine what entertainment is, but entertainment is entertainment. It's recreation. Will this stop businesses from taking customers out to entertain, or wanting to have a day a year to entertain the staff, whatnot? No, it just means they won't. It'll just cost them 1/3 more, essentially, because they won't be able to deduct it. So I don't think we're going to have a sweeping change in any of that. It might very well reduce the level at which some. The biggest question comes into play is when there are conventions and sales shows, and how much of that is entertainment and how much of that is not. That's where the real work lies. Most small businesses don't have to deal with that. So that's our tax update for this week. If there's anything we can do to help you out, please let us know. We're happy to help.